Hello, everyone. Thanks very much for joining us. My name's Nicholas Reid from Reid Corporate, and on behalf of lithium developer Essential Metals, ASX ticker ESS, I'd like to thank you for listening in to this special pre-recorded CEO interview. Well, it's obviously been a big few days for Essential in relation to the scheme of arrangement under which Tianqi Lithium Australia, or TLE for short, proposed to acquire all of the shares in Essential for 50 cents per share cash. After receiving a large number of questions and comments from shareholders over the past few days in relation to these developments, we decided that the best way to address them was to catch up with Essential's Managing Director and CEO, Tim Spencer, to run through them. So look, Tim, firstly, thanks very much for joining us today.
Thanks very much for the opportunity, Nicholas. I think it's a very good idea.
Tim, firstly, for the benefit of shareholders who couldn't attend last week's scheme meeting in Perth, can you give us a brief overview of what did happen at the meeting and what has happened since then?
Yeah, sure. Look, I'll start off, Nicholas, with just talking a little bit about what a scheme is. So a scheme is a company arrangement that falls under the Corporations Act. In fact, it's a section of the Act that actually deals with the administration of companies. So, for example, companies that are having financial difficulties. The key point of why a scheme is often used in a takeover situation is it's a binary outcome, all or nothing, 100% or zero. But also, importantly, it allows the company to drive the process. So the Essential board was responsible for the scheme and putting it towards shareholders for the vote. So that was an important consideration. We had the meeting on Thursday. Shareholders voted there were two thresholds to measure the shareholder vote. Both the number of votes cast, which had to achieve 75% for, but also a headcount test. So the number of shareholders who voted, the majority above 50%, also had to vote for. So the latter was achieved, but the former wasn't.
And as a result of that, the scheme has subsequently been terminated, or the implementation agreement has been terminated.
Yeah, that's correct. So one of the conditions precedent for the scheme, or under the scheme implementation agreement between Essential and TLE, was for obviously voters to vote in favour. Now, the fact they didn't gave trigger to a termination clause, and that was executed on Friday. So as I sit here today, the scheme is no longer on foot.
So let's go back a few steps, Tim. Obviously, you sent out some pretty extensive information in the scheme booklet. I think it was over 300 pages of information explaining why the board recommended the scheme. Can you give us a quick précis of what the key reasons were?
Yeah, sure. Look, and the scheme is a very regulated process, so it does involve a lot of information, and essentially it boiled down to a few considerations for the board. One was that at the time the offer was announced on the 9th of January, we were trading at 34 cents. So the premium put forward by TLE, which is obviously a joint venture between two very big and tier one lithium companies in IGO and Tianqi Lithium. So it was a very good premium, and the board felt an obligation to ensure that shareholders were made aware of the offer. It was binding, it was unconditional. So it was certainly a very compelling offer. And ultimately, for a scheme to proceed, the board of Essential had to recommend it to be able to go to a scheme meeting. So that's why the board recommended it. There's a backdrop that was taken into consideration by the board, was the macroeconomic picture, and particularly going forward over the next couple of years, with rising interest rates, tightening economic activity, raising cost thresholds, and also in particular the lithium market itself was cooling off from what was a very high 2022. I'm still very positive and bullish about the lithium market going forward, but I think a dose of reality has sort of come into the market this year. So with that backdrop, the board felt compelled to put it to shareholders.
So let's drill into this question of value a little bit deeper, Tim, because I've read quite a lot of commentary on social media and people on Twitter and Hot Copper and elsewhere suggesting that the consideration of 50 cents may have undervalued Essential. What's your response to that?
Look, I think first and foremost, the market determines the price of the company based on all available information. So, if we're trading at 34 cents, that's the midpoint of the buyers and sellers. And it also represents, obviously, in a diverse shareholder base like we have, there are different risk appetites as well. So I'm sure that a lot of those who are saying the price was too low probably had a stronger risk appetite to stay with the company through the development cycle and into production. And those who are looking at it and saying, well, that's actually quite compelling given the uncertainties looking at this point in time, looking forward. So on balance, I think, you've got to weigh up all shareholders' views. And that's why we thought putting it to the vote was the way to go. The reality is also that the independent expert, BDO, who is the preeminent consultancy or firm for producing independent expert reports, had opined, and we published the IER within the scheme booklet, and that they gave a representative or fair value of 37 cents, and they found that the scheme was in the best interest of Essential shareholders. So that gave the board a lot of comfort that what it was putting to shareholders was fair and reasonable.
And I think it's fair to say, Tim, as well, that there's been a very significant change in market conditions and indeed for the lithium price in the last 3 to 4 months. Did you want to just comment on that?
Yeah, sure. I mean, we're sort of very close to the market, so I suppose we're in a way ahead of the curve when it comes to anticipating what's coming forward. We felt there was going to be a softening, and I think the next few years will be really interesting as some big lithium producing mines come online. Commensurately, there are other supply issues that might constrain lithium supply, but we were just conscious of the fact that there was a softening occurring, and that's certainly how it's played out. And one of the other factors too, by going to a scheme, was there's a 3 to 4 month time period between announcing a scheme and shareholder voting, and that really, in a way, opened the batting for if anyone else that was interested in being involved in the company could come forward. And of course, at the death knell, lo and behold, Minres have ended up as a 20% shareholder. And I think if we'd told shareholders, if it was business as usual, if we hadn't entered the scheme with Teeling, and we announced that Minres had appeared on the register as a 20% shareholder, I think the market and shareholders would be pretty excited about that, and that's in fact what's occurred. So I don't think that there's been a lot of downside to engaging with Teeling. The board recommended the deal. Ultimately, shareholders have voted it down, and now we're going to get on with pushing the business forward with a new major shareholder.
So, Tim, you had a good premium, you had a favourable independent expert's valuation, and you had a falling lithium market, I guess, in a macro sense. So why did the scheme ultimately fail, given all those factors?
Look, our forecasts were showing that it was heading in a direction that could have likely got over. I think the presence of Minres buying on market after Easter and then subsequently announcing their substantial shareholder notice indicating 19.55%. They soaked up, with their 52 million share purchase, soaked up a lot of yes votes. And two, probably persuaded those who undecided to cast a vote no, thinking that there's something better in the wings. I mean, we did trade up to 58 cents. So in a nutshell, I think the presence of Minres through its on-market buying and then announcing its major position of just under 20% was the catalyst to turn the vote decisively to a no.
That's interesting, because there was obviously an indirect impact of their buying. On the day itself, they've obviously voted no at the meeting, but excluding that, the numbers were actually reasonably good.
Yeah, look, I think if you stripped out, well, the headcount test was passed, and if you stripped out the Minres vote, it was a 57% for vote, and that's including the fact that there were a lot of sellers to Minres, and there were a lot of people who voted no because of Minres. So, from a democratic point of view, the majority of shareholders actually voted for. They just didn't vote. We didn't achieve the threshold of 75% for.
So just before we talk a bit more about Minres, Tim, one other question a number of shareholders have put to me is an observation really. They've said that there didn't appear to be a lot of engagement from the company with investors and shareholders during the scheme process. And, instead they sort of heard from a proxy solicitation firm. Can you explain to us why that was the case?
Yeah, look, a scheme process is very regulated. So it's controlled by ASIC. It requires court approval. The legal advice we received was that, and it was guidance through, the lawyers receiving their experience in terms of dealing with ASIC, was that the company's representatives, the board and management, should not be engaging with shareholders directly. So therefore, it's always best to appoint an independent party to have that contact. The script that the party, Morris Adali was the proxy solicitation firm, the script that they used had to be court approved. So they couldn't just start calling up shareholders. It had to be following a court approved script. If shareholders made contact with myself, I was able to speak with them. But again, it had to be in the confines of that script, which was based essentially on the scheme booklet. So it was within the confines of the scheme booklet. The idea is that the scheme booklet should contain all the information that shareholders need to make a decision how to vote.
Thanks, Tim. So let's get to the crux of the issue. Do we know why Minres has bought just under 20% of ESS? Have you had any indications of what their intentions are?
No, look, there's been a lot of grand theories offered by multiple parties in West Perth and shareholders and also amongst ourselves, amongst the board. But at this point in time, I've had no contact with Minres directly. I'm sure that'll come in due course. And then we can better understand, why they're so attracted to Pioneer Dome and to Essential Metals.
One question that has come up as well, Tim, is why you didn't engage with other potential suitors or other counter bidders. Can you give shareholders a bit of a sense of an understanding of the restrictions that you faced, I guess, as a board during the process?
Yeah, sure. And I'll just, in terms of before the scheme was announced, Essential has been trying to develop the project with an open mind. So whether that's engaging with parties to joint venture to help fund, offtake, and some have approached on buying the asset. And as we know that in April last year, there was a non-binding takeover offer put forward and withdrawn. So there's been a lot of interest, and the company has been certainly active in encouraging people to understand the project and to understand its merits. So in terms of once the scheme was announced with Tealy, and Tealy, they're if you're going to choose a party to be involved with, Tealy was a very good party to choose. And they've built the downstream lithium industry in Australia by building the first refinery. So they're a really highly credentialed party to be with. But once we announced the scheme with them, we were then obliged to fall under a no shop, no talk clause, which precluded us from engaging with other parties. Other parties could have put forward an offer. Would have had to have been a serious offer, a binding offer, or with some conditions. But ultimately, the board would then have to have considered that with along with legal advice. And if it decided that or deemed that offer to have been a superior offer, then it could have engaged. But ultimately, that nothing like that came forward during the period.
And Tim, is there Tealy could come back theoretically with another offer or another form of offer? And I suppose if you could just address the question more broadly, because I know you can't obviously speak for Tealy or for Minres, but what are the technicalities around making another bid or making a bid, given what's happened in the last week?
As of today, any party can come forward and present something. But I want to make sure that shareholders or listeners don't think that that's what we think is going to happen. But just to answer your hypothetical, at this point, any party can come forward and put forward an offer.
Thanks, Tim. So I guess moving a little bit out of the realm of hypotheticals and back to the project and the company itself, I guess, well, what's next for Essential from here?
Yeah, look, we have lost some time because of the process that we've just been through with the scheme, but we have been still working in the background on preparing to go into our detailed feasibility studies, continuing our exploration programs, obviously without drilling. So it's re-engaging and reigniting those activities. We've already reached out to parties who participated in the expressions of interest process for offtake and funding. And we've already got some feedback and some meetings set up for this week. So that's really a high priority for Essential, and particularly for Robert Sills, who joined us as the General Manager of Marketing and Strategy. He's came from Core Lithium and joined us late last year. So it's really about re-engaging and reactivating our activities.
And presumably that would include a discussion with your new major shareholder?
Well, look, we had to respect the fact that Minres sits there at 20%. Obviously, the board in place makes the decisions for the company on behalf of all shareholders, and at this point in time, we're pretty keen to get going. And the conversation with Minres will be helpful to understand their motivation for joining us.
And I think sort of on the back of the scoping study last year, you'd already put some arrangements in place to progress the next phase of a pre-feasibility study with Primero. Can you just remind people where that process is up to?
So we completed the scoping study and published that in February. And just a couple of key points on that was that the level of confidence in the measuring of the capital cost and operating cost was plus or minus 25%. So it's more of a pre-feas level, so a higher level. And we did that specifically because we wanted to have a better understanding of our funding requirement, which we mentioned was around $350 million. And that was important because we're trying to look for finance to fund the project. So as part of the EOI process, it was important that potential partners had a higher degree of confidence in knowing what our funding requirement would be going forward. So moving from the scoping study, we'll now move towards a definitive or detailed feasibility study. A key part of that will be further metallurgical test work, so more on bulk samples. And then it's better understanding the ore bodies that we have from a mining perspective. So, looking at things like geotechnic, infill drilling, and better understanding and modelling for open pit mining.
So, Tim, it's pretty clear from the events of recent weeks, months, that you do have something that is in demand, an unencumbered lithium deposit in a great location. Can you just give us a few thoughts on your takeaways on the lithium thematic more generally, given the pullback in the market? Are you still a believer?
Yeah, absolutely. I think that the lithium thematic is going to play out for decades to come. It's the preferred atom in terms of electrification or electrical storage. I think that people should be a little bit more balanced, or will become a bit more balanced about their views in terms of demand supply shortfalls, because I think it'll be a bit closer. And Joe Lowry, who's a lithium expert, has shown charts that track supply and demand touching and then going apart, and touching and going apart. So it's a lot closer, I think, than people think. There will be competing technologies, but ultimately lithium is certainly at the forefront. There's been tens of billions, if not hundreds of billions, spent on investments based on lithium technology.
Thanks, Tim. Well, look, we do appreciate you catching up with us, and hopefully that's cleared up a few questions that shareholders may have had or have had and expressed to us over the last week or so. Maybe, Tim, do you want to just wrap it up with a couple of thoughts? And I'm assuming also that if people do have follow-up questions, they can reach out to you in the office, where you're much freer to be able to talk.
Yeah, absolutely. And that's look, I really welcome shareholders to make contact. My preference is to actually speak with shareholders rather than writing massive missives in emails. That gives the shareholder a chance to actually ask questions and make it more of a to and fro information swap. And so please reach out. And going forward, it's getting back to, I wouldn't call it business as usual, but it's the next step. It's pushing forward to become that third generation of lithium producer, hopefully within the next couple of years.
Fantastic. Thanks, Tim. Really appreciate your time, and thank you everyone for tuning in and having a listen to this CEO presentation with Tim Spencer, Managing Director of Essential Metals.
Thanks very much, Nicholas, and thanks to Reed Corporate.